Good afternoon. Thank you for joining us, and welcome to the first in our series of paid leave Oregon webinars. As I'm sure you are all aware, contributions will begin January 1, 2023, with benefits beginning in September 2023. So we are joined by staff from the Paid Leave Oregon program, which is a division of the Oregon Employment Department. We have Karen Hummelbaugh, who is the director of Paid Leave Oregon, Michelle Rowland Schwartz, and Andrew Warren. And I will, we will be recording this webinar. And at the end, we're going to leave some time, hopefully, for questions. So please use the Q&A function to ask questions. Just a reminder, this is the first, so we'll have another webinar on July 14th. That's another overview, and on July 19th, that will focus on equivalent plans. So I will now turn it over to Karen and Michelle and Andrew and whoever else we've got.
Wonderful. Thank you so much, Paloma. I appreciate it. I appreciate the time to be with you all today. I'm pleased to have the Paid Leave Oregon team. Karen Hummelbaugh, our division director, will be dropping some information in the chat. So links, PDFs, and additional information for you today. And thank you to Andrew Warren, who is helping us with our slides today. I am Michelle Rowland Schwartz. I'm the Outreach and Engagement Manager with Paid Leave Oregon, and really appreciate the opportunity to speak with you all today. So today we will spend the first few minutes providing an overview of our programs, including the specific topics that you see here on the screen. And after we conclude that introduction, we're happy to answer any questions or provide clarity on any items that you might have. Please do keep in mind that we are still developing some rules, policies, and procedures. So if we aren't able to answer your questions today, we will take them back to our technical experts and get back to the group. Today, we'll provide general overviews of paid leave, how it will work, who is covered, who contributes, and what assistance is available. So before we get started talking about paid leave specifically, we wanted to talk about the values we hold at the Oregon Employment Department. These values reflect how we operate and guide all of our actions and decisions. One of our agency goals is explicitly about engaging with communities in order to build strong relationships, and we're hopeful that these sessions will continue to build on that commitment. Paid Leave Oregon's mission and vision are unique and reflect the important work of this new program. And specifically, our vision is a future Oregon where individuals, employers, and families of every kind have the time and support they need to care for themselves and their loved ones during life's most important moments. This slide is really about the fabric of how we implement paid leave in Oregon. We are committed to addressing equity and access in a comprehensive and different way, as we recognize that traditionally agencies have created programming without talking to our customers. And we don't want to replicate practices from the past that have resulted in continuing systemic or institutional harm. We are striving to assure that as we build this program, we consider all possibilities for providing universal and equitable access. This includes consciously designing our program with considerations for disability, income, race and ethnicity, culture, gender and gender identity, employment status, education level, geographic location, and access to technology and justice system involvement. Our commitment also extends to recognizing, approaching, and offering government-to-government consultation with our 9 tribal nations that fall inside our state borders. We recognize that as bureaucracies, we have not always approached our work with trauma-informed practices, and we are committed to using trauma-informed approaches when engaging with the public. We recognize that individuals that we serve may have experienced trauma, and we want to assure our practices do not further that harm. So let's get into the program. In Oregon, paid leave is for up to 12 weeks with 2 additional weeks for some pregnancy-related conditions. And leave can be taken in 3 broad categories, and those include family leave to care for a family member with a serious illness or injury, or to bond with a new child after birth, adoption, or foster care placement. It includes medical leave during one's own serious health condition and safe leave for survivors of sexual assault, domestic violence, harassment, or stalking. So as I mentioned, paid leave was passed by the Oregon legislature in 2019, and only 12 other programs are like this across the country. Paid leave provides an important and vital safety net for working Oregonians who need to take time off of work for a major life event. And this program has the potential to really impact some of the ongoing causes of generational poverty, giving low-wage workers more opportunities that wealthier workers often already have to take time off to bond with their children, for survivors of sexual assault and domestic violence to address their own safety and healing, and for individuals to take care of the health needs for themselves and their loved ones. We are headed into the final months of implementation for paid leave in Oregon. We are still on track to meet all of our major deliverables, including starting to accept equivalent plans for employers beginning this September, withholding contributions in January of 2023, and paying benefits to qualifying individuals and issuing assistance grants starting in September of 2023. Most employers in Oregon are covered by Paid Leave Oregon. Tribal governments and self-employed individuals, including independent contractors, are able to opt into the program. There are different rules for large and small employers. For our program, we define small employers as those with fewer than 25 employees. All other employers are considered large employers. The number of employees in a company includes all employees, even if they aren't in Oregon, even though the benefits are directly for those earning wages in Oregon. Employee count will be determined each April, and the determination is based on the employer's quarterly reports for the first quarter of each year. There are some special stipulations for small employers. If you are a small employer with fewer than 25 employees, you can choose to not pay the employer portion of the contribution. Employees always contribute their 60% portion of the contribution, regardless of the size of their employer. However, if you would like to be eligible for assistance grants at any point in time, you would need to begin paying your employer contribution and commit to doing so for the next 2 years for all of your employees. Assistance grants give you funding to help hire or train replacement workers while one of your employees is out on approved paid leave. These are $3,000 for replacement workers or $1,000 for wage-related costs. You can have up to 10 grants in a year per employee. Okay, so we are often asked, what if you are self-employed or an independent contractor? While you are not required to participate in Paid Leave Oregon, you can opt into the program. If you choose to opt in, you will need to pay the employee portion of the contribution, which is 60%. Workers will still receive benefits just like any other employee paying into the state trust. Some businesses will choose to purchase or create their own equivalent plan versus participating in the state trust. Individuals working for an equivalent plan employer will still receive the same level or higher of benefit required by Paid Leave Oregon. When you have a life event, a worker will apply for leave, including any eligibility documentation, and let their employer know that they will need leave. After you are approved for leave and benefits, you will receive weekly payments for the amount of time you need, up to 12 weeks for most situations, with 2 additional weeks possible for pregnancy-related medical situations. And if you've been employed more than 90 days, your job will be protected while you're receiving paid leave benefits. So let's talk about the contribution rate. The contribution rate or percentage for paid leave is set annually, no later than November 15th, and cannot exceed 1% of gross employee wages. After 2 years of analysis and actuary data and numerous discussions with our advisory committee that is made up of members representing business, worker, and community voices, it was determined that the rate for 2023 would be set at 1%. There are a number of reasons why this rate was chosen, but it will be reevaluated every year. So as an example, if you earn $1,000 in wages this month, the employer would pay $4 and the employee would pay $6 in contributions. There is a cap on wages. So if you earn over $132,900, you only pay your contribution up to that amount. Earnings over that amount will not be subject to contributions. So one question we get frequently from both businesses and individuals is what payroll contributions might look like. This slide shows some examples of what that contribution amount equals for different types of wage earners. So as an example, a minimum wage worker would annually pay $168 and the business $112. 1 week of paid leave benefits for that same individual would be $540. Lowest wage workers will receive 100% wage reimbursement, with less than the 100% for those workers in middle and high income jobs. One of the most significant ways in which the public is able to inform paid leave is to participate in our rulemaking process, and many of you have already been doing this. We already have final rules for many areas of the program and are wrapping up the benefits portion. We're also headed into July for public input on remaining rules, including some equivalent plan rules. We are on schedule to finish our initial rulemaking as statutorily required by this fall. And this concludes our overview, and we would love to hear your questions or clarifiers. Thank you so much.
Let's see, we've got one question. How often will rates to the fund for the program be reevaluated?
The contribution rate will be set annually. Generally speaking, we will set it in the fall at the same time as the unemployment insurance rates are released. This year, we decided to release it early just so that folks could have some better planning, but the next time the rate will be released and reviewed will be in the fall of 2023.
Okay. Now the questions are coming in. So the first question I had was, can you go back to the slide that shows low and medium to high wages?
And these are just some examples. Obviously, this also adjusts, I think, annually. I think this one adjusts in June of each year, but is based on the current data, depending on what the weekly wage amounts are.
Okay. Then question.
And we can make sure this PowerPoint's available, Paloma, too, to folks. So.
Yeah, and this will also be recorded. So then I have, how are the payments made?
Yeah, so logistically, the way this will work is the individual would apply for the benefits. This will actually be done through a modernized portal that we'll have beginning next September. They would be both shown eligible for just the income verification and then also the qualifying condition. And then they would be able to receive their benefits coming directly from us as long as they're participating in the state trust. So the employment department would be sending them their check, as it were, but that can happen in a number of ways, including sort of like EBT check. So there will be ways in which a person could choose that they want that benefit payment. if you as an employer are choosing an equivalent plan, then you or your third-party insurer would be responsible for those payments.
Since I'm not entirely sure which was the question, direction, can you also talk about how contributions will be paid?
Okay, yeah, so thank you. So the way in which contributions will be paid is that beginning in January 1st of 2023, you will begin collecting those contributions. They will be paid quarterly, so you just hold them in trust until your quarterly payment. At the same time, through your payroll reporting system. Again, this will also be a modernized system starting in September, both for unemployment insurance payments and for paid leave contributions. And so those payments would be coming into the employment department directly on that quarterly basis.
And then we have a question, is there a cap on increases? And I am assuming, is there a cap on the contribution rate?
Contribution. Statutorily, the contribution rate is maxed at 1%. So we're currently at the max. I think all of us are hoping that we move our way down from that. The first year's rate being set at the maximum has many factors, but the greatest of which is that we only have 2 quarters in which to collect the contributions before we begin paying benefits versus having a whole year worth of contributions. And we do statutorily have to have the ability to pay out 6 months worth of benefits always in that trust. So 1% is the max.
And does the benefit cover owners, business owners?
This question really depends. I'm going to simplify this a little bit, but generally speaking, if you are sending yourself a W-2, if you are paying yourself wages, and so you're a W-2 employee, that would be potentially, it could cover an owner. But if you are just the only person getting paid and you're a sole proprietor or something like that, then that would be a situation where you could opt in. So it kind of depends on your structure and how you're paying folks. But most folks who are being paid in sort of a wage way, like a W-2 is being issued, would be covered kind of regardless of where they sit in the company's hierarchy or infrastructure.
Okay. I had another question that relates to the slides. Can you go back to the grant slides? You want to see how many grants are allowed.
And I'll touch on this too. You are allowed 10 per year. So up to, I mean, if you kind of do the multiplier there, it could be up to $30,000 for the replacement worker and those wages.
Then how are employee contributions reported by employers?
Those will be on that combined payroll reporting form. And so that will be in that the combined payroll reporting form that you'll have. And for those of you who've used the old system with unemployment insurance, in September, we are launching our new modernized portal. It's called Francis. All of you will have all of the information for both paid leave and unemployment insurance in there. And that would be where you're reporting. It's also a place where you can see your unemployment insurance rates. It'll show the rates if the rates change here as well. So all of that should be contained in that new system.
How will the application process work? Will employers have any responsibility in the application process?
The application process will really be the onus is on the individual who wants to receive the benefits, so the worker. So they will be going into a portal that's for them as the benefits portal. They will be applying. We'll be doing behind the scenes, do they meet eligibility? Have they presented all their appropriate documentation, et cetera? So that is all on the individual worker side. There are, though, some obligations for each worker to inform an employer that they're planning to take leave. There are timelines with that, 30 days when possible. There are some cases where it might be an emergency, and so less time is allowed. And then once somebody is approved, we will be communicating with the employer and letting them know that, you know, this person is approved for X amount of leave, whether it be consecutive or intermittent or what that may be, so that you're also aware of that approval.
Okay, and this, you sort of answered it. Is this like Washington State where the employee goes directly to the state in order to get the paid leave and not through the employer?
Correct. The exception to that would be if you are applying for an equivalent plan, and so then you would be managing it yourself. But if you're participating in the state trust, then yes.
Okay. We had a question. What does the private market plan process look like if an employer chooses to select that option?
We're very close to releasing what the equivalent plan process looks like. We will be beginning accepting applications on Labor Day weekend, basically, but we will have more guidance out hopefully in another couple of weeks. There will be an employer guide that will talk about the kinds of equivalent plans you can have. So you could either, as a business, have your own equivalent plan, or you could go through a third party. We're working with our partners at Department of Consumer and Business Services to make sure that they're able to list who is eligible and available to provide an equivalent plan for paid leave. So that will be something that they're listing too around that same time, so that you have that list of, you know, which are the third-party insurers who are approved to provide equivalent paid leave plans in Oregon. And if I didn't, some of these, if I'm not answering all the way, or if you have a follow-up, please let me know.
Is there minimum leave for an employee? For example, if an employee is ill often, once or twice a week, can they draw on the funds, or is this only for long time leave?
Paid leave can be in intermittent or consecutive, so it doesn't have to be, you know, every day of the week for 12 weeks or for 4 weeks or whatever that they're eligible. It can be as little as 1 day at a time, but no fewer increments. You can't do hours. You can't say like, I want 4 hours here and there, but 1 day would be the smallest amount of time that somebody could get approved.
We've got a few other questions about how the contribution rate will be calculated, but I'm going to go through this question. The private sector short-term disability leave is pretty consistently higher priced at the current time for my particular group of 85 employees who are ages 25 to 38 years old, which leads me to believe that the state funded plan will increase dramatically each year. Is there a set amount that the state can increase the contributions each year?
Yeah. We are statutorily held to that 1%, and we cannot go over it. So again, the max would be the 1%. Hopefully, I think a lot of stakeholders are hoping, a lot of legislators who pass this are hoping that we're actually decreasing that over time as we build the trust.
So if a business owner is not a W-2 employee, are they ineligible?
Not ineligible, but not required to participate. So if you're a business owner who's independent contractor, self-employed, one of these other categories, you would be able to choose to participate if you wanted, and then cover yourself based on the employee percentage of the contribution rate. But you are not required to participate if you're in that situation. And I know there are like a lot of different configurations for businesses, so folks are going to want to make sure, and this is in rule and a little more specific than we're getting into now on our website, but just to make sure that for your specific circumstances, you're checking in with your, you know, your attorneys and folks, and just making sure that that's clear. Or if you have questions about your particular corporation, we can talk to you offline as well.
And then this is a question about the deduction. So employee contributions, is that pre or post tax?
We are still working on all of the tax questions, to be honest with you. Both the IRS and, well, the IRS firstly has not given guidance to any states who have previously been able to implemented these plans. We are working heavily with the Department of Revenue here to make sure that we have that answer for us about how it works here in Oregon, but we do not have an answer to that yet. Obviously, we'll need that prior to the contributions being due in January, but those conversations are ongoing with both Department of Revenue and our Department of Justice folks. Which I think there's a lot of tax questions that go with this, like can we, if the employer decides to pay the 60% that's for the employees, do we get a tax deduction? Those are also in that same sort of genre of all things tax questions we're still working through and trying to get answers for.
Couple of questions about, who is covered, who is not. Is there a process for opting out? And is it true that small employers under 25 employees are not required to participate?
There is no process for opting out. So if you're somebody who's covered, regardless of size, but if you're an employer who has, one or more employees, then you are in. So there is not an opt-out kind of a process at all with this. For small employees under 25, the business does not necessarily have to pay its portion, but your individual workers will still be required to contribute. So you would still be collecting that contribution amount and paying it on the quarterly payroll taxes for them. But you as a small employer do not necessarily have to pay in unless you want to participate in those grants that we talked about, which is sort of the incentive there.
And if you are a small employer and your employee files a claim for benefits, what does that look like as a small employer?
If you're a small employer and your employee applies for benefits and it's all approved and all of those things, they would be allowed to take leave. Part of it, it doesn't look any different for a small employer than a large employer, other than if you want to start paying those employer contributions, or if you have been, you would be eligible for that assistance to be able to do replacement wages, hiring costs, training, et cetera. But that doesn't look different for a small business than it does for a large one.
Okay. Then we've got a number of questions about sort of the eligibility time period. So I'll just try and fit them all in one spot. Does the 12 weeks of leave roll over every year? For example, an employee could take 12 weeks every year if they meet eligibility.
So that is possible. This is not a calendar year, so this would be running on a benefit year. So if I sent in my application, got approved, et cetera, on October 1st, then my year would run from October 1st through the end of September the next year. If I then hit the next October 1st and had a different or additional qualifying condition, it is possible. Keep in mind though, the person would still have to be working and earning wages in that previous year. So it would not be like you could not work and receive benefits for a second year.
Then I've got a couple of questions about what happens after that 12-week period has exhausted. So if an employee has used those 12 weeks, is the employee's job still protected if they decide to extend their leave?
In terms of the paid leave protections would be in place through that benefit time, but there might be times when OFLA or FMLA may overlap, or even in the case of OFLA, there are some conditions that are qualifying that are different. And so this kind of depends on that overlap. We are working with our partners at BOLI, and actually Paloma helped to refine some of the answers we have here, but on a matrix where we would be able to talk about where those things do either run concurrently or not, where job protections do run or don't, what that looks like in terms of eligibility. My hope is to have that sort of more publicized, those matrices for folks in the next few weeks.
So assuming you had a business that only had 25 employees, and an employee they were an employee who had recently been pregnant or given birth, and they had used up their 12 weeks. Are there still job protections for that employee?
After their 12 weeks?
So they've used up their 12 weeks and they decide to extend their leave.
Oh, I feel like I'm a little out over my skis on the answer to that one, unless Andrew, you're able to answer it. We may have to get back to folks on that particular one because I just don't want to say the wrong thing publicly. And I apologize for not knowing all of these. Sometimes it's hard to remember in the moment too. But Andrew, do you know that off the top of your head, or could you find it, or do we want to just get back to folks with that answer?
I think I know, but like you, Karen, I don't want to say what I think is right and have it be wrong.
Okay.
So I've written it down, and we'll get an answer for that one.
Okay. There may be a number of these folks that we write down and then get back to the group that Paloma can send out for clarifiers. So thank you.
And then what kind of documentation is needed for medical leave, if any? Is it subjective, or are there guidelines? We've got a number of questions that are generally, what does the verification process look like? Yeah,
we're actually still working on a lot of the processes in terms of the benefits rollout, since that happens next September. Right now, we're beginning those benefits conversations. We just finished finalizing our benefits rules. But I can tell you, yes, there will be a process. Yes, it will have to be like medical certification, similar to other things. We will have specific folks on board with expertise in this area. We are working with our friends at DHS who have a little more experience in terms of healthcare and certifications. And so, yes, that will all be included, and we will have people who are looking at that, and those would be certified and sent in with all the appropriate documentation. I think that probably covers most of that. And sorry, Paloma, just as we're developing these, we will be updating our website. We have said, hey, subscribe to our bulletins or our mailing list. We will make those kinds of announcements as decisions are made or forms are created in those bulletins. So if folks are signing up for those, that's a really good way to, as in the moment we make decisions, you would be like kind of the first to know. Another way is to just check back on the website occasionally and see the FAQ section, but that's where those decisions will be published.
Yeah, I mean, part of the reason why we're doing this is to figure out what are the questions that we didn't think to have to wrestle with.
Yes, all of the community forums we're doing are helping to multiply our FAQs and our bucket of to-dos, to be honest. And so it's actually very helpful to hear these kinds of questions and the details folks need.
Right. And then we've had a couple questions about what happens if an employer is already providing some sort of benefit. So one, if they provide, a short-term disability plan already, or they provide, significant amounts of sick time, how does that work with paid family leave? Is there a requirement that you use the employer's benefit first before you would go to paid leave, or what happens if you're also being paid out of short-term disability plan?
Yeah. There is no requirement that you have to access any PTO or something first. If you're eligible for the paid leave, you are able to take it. I think folks are going to have to really look at their short-term and long-term disability plans, especially those through third party, to see if they're what they look like, if they're needed. But really, paid leave is very separate from those, and it is separate from what the employer is already providing. This question usually leads to folks saying like, I'm pretty sure that I offer something that's the same as what you're saying here for paid leave. And so that's where an equivalent plan may come into play if you feel that you are already offering or could easily tweak a plan that you have to become an equivalent plan. Just keep in mind, if it's equivalent plan, it really does mean equal to or greater than in the benefit amount. And so that means the full 12 weeks plus the 2 weeks for possible for pregnancy disability. It means at the same rates for wage replacement. It means the employee cannot contribute more than the 60%, the dollar amount. It has to cover all of the leave types, so family, medical, and safe. So if folks are considering like, how does this work with an existing plan? Can I just create a little more on my existing plan to make it equivalent? Let's keep those kinds of things in mind. And we'll have further guidance, and as Paloma said, another webinar with a little more detail soon too.
So if you as an employer offered a short-term or long-term disability plan, but it didn't include family leave, let's say, does this essentially make those plans moot?
I think it's something for businesses to look at to see if they still would need to offer the alternate plan, and or if they want to supplement those plans to make it so that it becomes an equivalent plan and just add in the one thing that's missing perhaps. So again, that will also depend on who's providing your short-term disability currently, and whether or not they become somebody who's eligible to provide paid leave. So these will be a lot of individualized decisions for businesses, but certainly I think that it will create a conversation for businesses to look at that portfolio of offerings and whether everything is still needed in the same way.
I have a number of questions about sort of the estimated timelines between a filing of a claim and payments going out to employees. Can you talk a bit just generally how the department will handle those requests and getting payments out?
Yeah, our goal is that we'll pay benefits within 2 weeks of an approval, somebody being shown eligible. We are also hoping, and again, this will be something we can talk about as the next few months go by, but we're hoping to accept applications early as we move into benefits next year. So probably starting in August, being able to allow people who know they'll be eligible on September 1st. The easiest example is here is someone who's having a kid or just recently had a kid or adopted somebody. So that we can actually get the bulk of those folks who qualify in the queue so that we can make those payments. We're keenly aware of making sure that we get the payments out in a timely way. And so that's the commitment.
So we have a number of questions here about how this works with OFLA and FEMLA in terms of overlapping. So how does OFLA, FEMLA, and paid leave run concurrently? Confused by the eligibility timeline differences. That was one question. Then did I hear correctly that this is also job protection runs with OFLA, question mark?
Yeah, so in many cases, there will be a concurrence possible with OFLA and paid leave. However, OFLA does cover some things that paid leave does not. The two most obvious examples of that are bereavement and military leave. And so there is a possibility that you might be qualified for a paid leave OFLA covered event, but then you might have a different OFLA qualifying event. And so there are some sort of messy little exceptions here, but it is possible that there could be some lack of concurrence. But generally speaking, your paid leave and OFLA should run concurrently. And yeah, hopefully the matrix will clarify this in a way that's a little more easy for the visual to be able to see where these things do have different timelines or not. Also aware of the fact that we're saying, you know, the year is not the calendar year. Some of these things don't neatly align. A lot of discussions being had about, you know, once we're implemented, what does that look like in terms of some states got rid of different state provisions when they brought on their paid leave. We did not do that in Oregon. And so conversation about how everything fits together and how to make ease of benefits for both the business and the individuals.
In the event that the program turns out to be underfunded, will the grants be cut first, or will the funds be distributed on a first come, first served basis?
I might need to get back to folks on that one. I do know that in the event that we're underfunded as a trust, we would basically be stopping to pay benefits, but the question about the grants is an interesting one I'm not sure of, unless Andrew, you know that off the top of your head. Andrew's got a little more technical knowledge than me, but also I don't want to put him on the spot if you don't know that, but that might be one we want to double check behind the scenes.
That's a great question that I have not heard before. So
Yeah.
I've got it written down.
Yeah, I think generally we think about it in terms of if the trust is not robust enough or cannot pay benefit, then we just stop paying benefits. I don't know that we've gotten down to the detail of the grant. So it's a really excellent question.
And then since we're on grants, I think there's a couple of questions about what would be the eligibility criteria. Is it only for small businesses? That sort of thing.
Yeah. So the assistance grants are a specific provision only for small businesses. And remember, in this case, and I know this is not the same for all programs the government has, but for purposes of paid leave, under 25 employees is what we call small business. So only small businesses. I wouldn't really call it eligibility requirements, but you would have a bit of paperwork to turn in to say like, okay, so-and-so has taken leave and I would like to be able to get the grant so that I can do the replacement, the hiring behind the person. But that would be more through that portal and more of a just sharing information about the who and the grant being released. I wouldn't say it's eligibility. It would just be making sure that that you as an employer are paying your portion, all of those things.
Are there specific notification requirements for the employer before contributions start in 2023? I'm assuming that this means, does the employer have to provide some sort of notifications to their employees about what is about to happen?
Yes, there will be. We were just talking about this today in terms of what the posting looks like, what information is on it. What I'm not sure, and I do need to get back to you on, is the date in which that both we will get it to you and that people need to post. Posting though could mean not necessarily physical posting, but it could mean that you're just sending that out in payroll or some other way. We do know that folks are not always in person, and so that notification could look a variety of different ways. But yes, there will be notification required.
How are employees who work remotely outside of Oregon treated? Do they make contributions? Are they eligible for benefits?
Yeah, I think the easiest way to think about this one is where you're being paid. So that's kind of one way to look at it. So if you have some folks who are working in Washington, working in Oregon, there's a whole place of performance issue that we're getting more specifics and we'll have better examples on shortly. We've just been working on that behind the scenes as well. But if you have, 50 employees and 25 of them work out of Oregon and the rest work out of wherever else in the country, you would be paying on the 25 in Oregon, assuming the rest aren't in paid leave states, you wouldn't have to pay on those. And I know there are some nuances on, what if people come in some days, some years, all of those things. Those are the examples that we're working on currently. And I know that's getting close to being able to be on the website as well.
So if an employee worked in Washington,
Mhm.
but the company was in Oregon and they paid them, are they covered under the Washington program or the Oregon program? Let's say they work from home in Washington,
Yeah.
but the company's in Oregon. Company would identify their work location normally as in Oregon, but they
Yeah.
work from home in Washington.
I think it's about where their pay is reported. So it's basically on their payroll, like where is that being reported? Andrew, if I'm terribly off on that, you can correct me, but that's my understanding.
We'll spend some more time on this one.
Yeah, and this is another one where I think we get into a lot of like, what if they're 2 days here or they're remote here, and there's all these other pieces, which is why I've said there are a bunch of examples that have been written up, and hopefully we'll be able to give people some really more concrete examples. I think especially in the border states with Washington and California, where they also have paid leave programs, we want to make sure that businesses understand where they're paying out, and then also individuals understand which state they would receive benefit from. So I think that's going to be a bit confusing for folks too. So trying to add some clarity to those pieces for sure.
Is there a waiting period?
This is a great question, especially for those of you who may have business in multiple states and other paid leave states, but for Oregon purposes, paid leave does not have a waiting week or a waiting period.
If an employee takes intermittent leave and gets paid by the Paid Leave Oregon program, and the employer pays PTO, does the employee have to report that they are also receiving PTO payments?
The short answer is no, they don't have to report it, but we are statutorily obviously not supposed to be incentivizing people to be, getting more than their regular wages, but there isn't a reporting mechanism for the employer or the employee here that I'm aware of, in terms of saying I'm using X sick leave, X vacation, whatever that may be.
So, I mean, I know that there are provisions in the statute about sort of making up the difference. But what if it's a complete? So the employee is claiming full PTO and getting Paid Leave Oregon benefits.
I am honestly, I know this is to the double dipping question that people always have. Theoretically, people cannot do this, but I'm not sure the mechanics of that. And so that's my hesitation. So that's one where we need to get back to you, I think. I know that the intent is that not occur, and the intent is that people aren't able to, make more on leave, obviously, than their full benefit amount. There will be cases where the person isn't getting their full wage through their weekly benefit amount, and so then making that up may be an option, but it shouldn't be a case where you can double dip and sort of like do, double your salary.
Somewhat related, there's a number of questions about whether or not the employer has any sort of verification or documentation requirements when an employee files a benefit claim with Paid Leave Oregon.
There shouldn't be. It should be that behind the scenes, we are able to verify both the person meets the income requirement for Paid Leave Oregon, and that they're currently working and those kinds of things just through the system because of the payroll contributions. And so that should be, there shouldn't be any additional paperwork for the business side in that instance.
They also wouldn't have any role in verification.
Correct. There may be cases where someone's brand new or something like that, where there may need to be a phone call or a verification, but that should be pretty rare.
If an employer hires a temporary worker and they reach the $1,000 threshold, then that employee can use benefits also.
Yeah, so I think if I'm understanding the question correctly, any individual worker who has earned $1,000 in wages or more in the previous, I'm generalizing, but the previous 4 quarters essentially, would potentially be eligible. They could have earned that wage at your place of employment, or they could have earned it other places, but it's just if they've earned those $1,000. So if you've earned 1,000 or more in the previous 4 quarters-ish, you will potentially be eligible. Obviously, then you have to have the qualifying condition in there as well, but you would potentially be eligible for benefits. There is no sort of differentiation between a part-time worker, a full-time worker, a seasonal worker, a limited duration worker, all the different ways in which we sort of classify workers differently. It is basically meeting that eligibility requirement for income, the qualifying condition, and then obviously having to be working at the time in which they want to take leave, so taking leave from a job.
And would it be possible for an employee to file a claim with Paid Leave Oregon and to take paid leave, but an employer not be notified?
I cannot think of a circumstance where that would happen. What you may not know as an employer is we're not going to say the person's getting leave for XYZ condition, but you would be notified as an employer that they are eligible for leave up to X amount of time for a qualifying condition under Paid Leave Oregon.
And what if an employee files the claim and does all the things and doesn't take leave? So what would be the consequences if they're receiving payments from the Paid Leave Oregon program, but they're actually being full-time?
Working and receiving a paycheck basically at the same time. We will be, I mean, there's a whole side of this that is auditing and fraud prevention on all sides, including healthcare, business side, individual side. So there is a lot in that arena, and a lot of things we'll be putting into place. But we will be looking at people who kind of behind the scenes doing that cross match between people who if you're reporting wages on them at the same time they're getting paid leave, then that would be flagged. I think that's probably the simplest answer, but obviously nuances to a lot of these things. But basically, by having the program here at Employment, we're able to do that kind of wage match, cross matching.
How are employees counted? Are seasonal and part-time included in the count?
Yes. I had a cheat sheet here, so I would be able to answer this the next time, and I feel like I'm not going to get my hands on it immediately, but essentially it's head count. Think of it that way, a little bit more than you would think of FTE, full-time, part-time, all of that. It's more like head count. It will be based on, again, those quarterly reports that you're submitting. So we will be looking at those. The first year, the timing is a little bit different, and the second year, the timing is a little bit different than an ongoing because we don't have any data. So we'll actually be looking at your first quarter's count. So the count for the first quarter of 2023. So we'll be looking at those in April when those are submitted, and that'll be your head count for the first year. So you'd be notified by us that you are a small or large employer for purposes of paid leave. The second year, we're using the first 2 quarters of the year because, again, just the data points aren't all there. And then after that, it will be based on an average of the year. But for first year, next year, we will be looking at what you've filed for the first quarter.
Okay. I don't think we're going to be able to get to all of the questions that we have in the time we had, but I had one last that was just posted, and I think it shows the one complexity for employers of dealing with paid leave Oregon, which is going to function so differently than most other programs that they're accustomed to. So I just wanted to make sure we ask this question. Can an employee sign up anytime, or is there a sign up window tied to a hire date? What about gaps in contribution, job change or cancellation, and signing up again?
This has some nuances to it as well, but could an employee sign up anytime? Yes, potentially. Again, if they met that income threshold, they met a qualifying condition. It could be that they're on the 17th day of the job with you as a business, but they earned the benefit at a different job and they may still qualify. Job protections, however, are tied to the individual business. So you would have to be at your business for 90 days in order for those job protections to apply to them. We are working through some of those other pieces of the questions in terms of what does it look like when you switch employers, especially if an employer is an equivalent plan employer versus the state trust. What will that look like? And how will that work? But the benefit does really follow that individual. You couldn't just, you do have to be working. And so that kind of helps too to think about it. So you couldn't just like in the middle of being paid by paid leave, shift jobs and then be like, because you'd have to like still be working for the employer, I guess, if that makes any sense. So you do have to be tied to employment and taking leave from work, which I think it'd be challenging to say like you just moved jobs somewhere in the middle but didn't start at that job without that. So again, it would depend on if you're on intermittent leave or if you're taking it all consecutively. So these are places where hopefully as we're developing scenarios and sort of our FAQs, we will have a little more clarity about what that looks like and how people can move from plan to plan or business to business.
And then I had another question, which is not one. Yes, there's some complicated questions, tax implication questions, job changes, maximum salary. We're going to need to work on our, have more conversations about how that will work. But I think this is a question that's probably going to come up, which is that what happens if an employee is going to retire at the end of 2023 and they are paying contributions? Do they essentially just lose that?
Yeah. Contributions are not the same as like unemployment insurance where it's sort of tied to you and it stays in a little bucket for you. All of the contributions do go into the state trust where they live and are paid out. And so when I pay in all of 2023, if I don't need or don't require a paid leave benefit, I don't get anything back at the end of the year. There's no like it sticks with me till my last day of work. It really just goes into the trust and is used to pay out benefits. Oh, thank you. And Andrew did put the fact sheet. Sorry, I was planning to do this earlier. So thank you, Andrew. He did put the fact sheet link in there. I think it'd be really helpful for us, Paloma, other than, I know we have another session, but if we can capture the QAs from here so that we can make sure we get all of the members' questions answered, that would be great too. So I know we didn't get to everything.
We will do our best.
Thanks.
The chat is the one thing that's hard to
yes.
capture. So
yeah, I'm trying to
right now.
Okay.
Thank you so much. And to folks that have been listening in, please continue to send questions our way, or you can send them directly to paidleave@oregon.gov. But I am carefully tracking all of the rulemaking and other discussions about paid leave Oregon as we look to implementation. So feel free to send them to OBI also, and I will make sure they get to the right place. Remember, we will have at least two more webinars, probably more than that. I'll do it. As we prepare for 2023. Thank you all for participating. Thank you particularly to the Paid Leave Oregon team, and urge you all to sign up for their listserv so you can get information about updates and changes to and information that gets posted to the website.
Yeah. Thanks, Paloma. Thanks for having us, everyone.
Thank you.
Thank you.